As we wrap up in an insane month where the market soared while the real economy cratered, I think 30 million jobless claims in the last 6 weeks. I don't know. As I said at the top of the show, let's be a little cautious. Now, look, there have been some genuinely positive developments that feel like a light at the end of the tunnel. We've got the antiviral drug that makes COVID less devastating. We're gradually reopening the economy. The new case numbers have plateaued. And between the Fed and the Treasury, all kinds of businesses are getting some assistance that they need to stay afloat. Now, these are meaningful positives, but it doesn't change the fact that we're in a recession, and it doesn't change the fact that we just had a gigantic move off the bottom that really encompasses all of that good news. And when you're in a recession, you know what you need to do? You shouldn't be aggressive. It doesn't work. You should be defensive. And you got to stick with defensive stocks, like the CPGs, as we call them, the consumer packaged goods place. These stocks are big winners for the year, although they pulled back a bit over the last couple of weeks as Wall Street just got more bullish on the economy. Remember, they're buying the oils and buying the airlines, buying the cruise ships. Now, I see this as a buying opportunity for the likes of Clorox, Colgate-Palmolive. They both report tomorrow morning. Procter and Kimberly, two stalwarts that have already put up excellent numbers. But tonight I've got a new one for you. It's one I haven't talked about at all. And it's just as much of a household name as the rest of them. And it's called Reynolds Consumer Products. It came public in January. Now, you know them as something that, look, if you pull open a drawer, I don't know, you pull up a drawer in my house in the kitchen, there it is, it's the Reynolds wrap, right? And then you open underneath the sink, and there it is, it's the Hefty bags. And then the disposable cups got them. Easy Flow, I don't use that stuff, but it's theirs too. Reynolds debuted at the end of January without much fanfare. The deal was sleepy but well received. When the pandemic hit, the stock rolled over from mid-February through mid-March, like every stock did. Although since then, it's come roaring back, climbing from $24 back up to $32 and changes of today. So could this one have more room to run? I have to tell you, I think this is exactly the kind of company that should be able to thrive in a tough economy where millions of Americans are stuck out of work. And where are they? They're at home. On the other hand, the stock's already rebounded substantially from its lows, and this is a news story, so there could be some hidden pitfalls that make the stock less attractive.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.